Good morning. Welcome back to Market Monday, and thanks for joining me each week. Let's take a look at what's happening in the housing market. So we currently have 1,282 available homes for sale. This is great news as we've had a shortage for over a year. We have 108 more that are coming soon within the next 7 to 21 days. That's exciting for us. Couple areas that I like to talk about are Oregon. We have currently 19 available homes, and Point Place has 28. We had 3 new listings in Oregon last week, 4 new ones in Point Place, 1 new coming soon in Oregon, 2 new coming soon in Point Place, 7 houses that went under contract in both areas last week, and 5 that sold and closed, and 4 that sold and closed in Point Place. The good news in all of this is we are getting more listings on the market. It's going to help stabilize prices so they're not accelerating at 13.8% as they have been. We were at 10.2, I think, last year for acceleration of prices. So this will stabilize this a little bit. We are starting to see the market soften a little bit. Obviously, going into fall, though, we do expect a very busy second and third quarter and first and second quarter of next year. So this is our market watch. So it tells you in the last 7 days what's happened. 77 new coming soon, 237 new listings. So 314 new listings in the last 7 days, which is great news. We've been running around 700 or 800 total houses. And just last week, we had 314 new ones. So that's great news. We had 253 that sold and closed. The other piece of this screen that's really important is we have more houses coming on the market than what are being sold and closed. And that's good news because that's going to make our available home numbers go up for our buyers. And so this will be a good, it's a good thing for our market. So we had in July, our August statistics are not back for the local Lucas and Upper Wood County housing market update, but what we still are kind of looking at right now, total number of sales were actually down in July a little bit, 6.4%. Sure, that was influenced as we didn't have enough homes available for sale, and we had a lot of buyers that got buyer fatigue, which we've talked about in previous weeks. The average sales price was up 13.6% in July to $200,604. It's a crazy Monday morning for sure. And the average number of days on the market was down by 27.3%. So new listings were up 13.6% at 1,320 numbers. So more new listings, shorter time on the market, and prices were up in July. So these are great things to talk about for our sellers. We are, like I mentioned, starting to see some signs of softening a little bit in the housing market, but don't get confused because even with this little bit of softening that we're having, we are still in a very competitive market. So let's take a look at our pending home sales. This is how they're determining that's this softening. The little arrow that you see right here talks about showing a downward trend, July, August. So not as many houses going under contract. But if you take a look, we're comparing it to last summer. So if you remember what happened in the spring, there were no pending home sales or very few because everything was shut down because of COVID. And so then these are our crazy numbers that we had last summer. Very high number of pending home sales. But if you look at what's happening right now, yes, we had a very busy July right here, and we are trending down a little bit. We are still above this historically healthy level. So this white line is 100% normal level market. You can see because of the crazy dip we had in the spring of 2020, we had an accelerated peak here in 2020 in the spring well, in the summer, actually, and going into fall. And then wintertime, we always get a little bit of a dip. You can see we peaked out again here in July. It is very normal if you look at previous trends, where the spring market is usually heavier. And then as we transition into the summer and fall, it does decrease anyways. But we're still well above a historically healthy level. We continue to look at this even through our showing time. So this was the peak in after the shutdown last year for the number of showings. This is the monthly index, which was 230 or 283.8 to 80.7. This was this was our spring of this year. If you look back to summer of last year, we're way up here in the 200s again. And then if you go back before that, you'll see January of 2020, we had started on a great pace for what was going to happen in the housing market for 2020. And then right here in the red is where you see COVID. So the showings dropped out, then they peaked again in the spring, summer. We stabilized through the winter. We come into spring market and you can see the number of showings was way up this summer for the number of homes that we had, because we had multiple buyers looking at multiple homes. We are currently in July, we dropped to about this 189.4, and you can see that a normal July in 2019, which is what we should be comparing things to, was 123. So even as numbers start to decrease, you will see that we are still well above a normal market. So it is kind of hard to keep comparing things to 2020 just because things were kind of skewed and off because of the shutdown and what happened. So we want to make sure that we're looking at more than just year over last year. We want to make sure we're looking at 2019 and comparing everything as a whole. So our United States housing market continues to be very ultra competitive, even as new COVID cases surge. But they're, like we've talked about, this slight softening, and it looks like about 49.6% of homes that were sold recently, 1 out of 2 over the summer were going over list price. And so we want to keep that in mind. This was in July. And so that is starting to soften a little bit. So in 2020, so again, we're talking about 2020, it was about 26.8. So 1 out of 4 homes was selling over list price, and 1 out of 2 this summer was selling over list price. So we had a very dramatic summer. And here's our scale, or here's our graph to show you percentages of homes selling over list price this year. So July, we were 49.6, 1 out of 2. June, we were 50.4. And then July of 2020, 26.8%. So 1 out of 4 homes were selling above. So our number of new listings, you can see these graphs. So 2020, again, here's our dip because of COVID, and we come back up in 2020 for the number of new listings. We never quite got back up here where our normal numbers would be. And this is why I'm saying we need to take a look at our historical data, not just over 2020. So if you look, the white line is 2017, the blue one is 2018, and the grayish one is 2019. Normal January market right here. We spike as spring comes up into May or June, well, May and June, and then as July comes, people vacation. The number of listings usually decreases, and we come into fall. And then we have this slow, steady decline into December when, of course, people don't want to sell their homes. Not everybody does anyways, in December, because they're decorating and having holiday parties. But you can see in 2020, we started on that trajectory, and this nice steep upward incline that we had. We were projecting a pretty healthy 2020 housing market, but then we had COVID, which bottomed everything out in April, all of our numbers. And then we never quite got back up where we should have been in comparison to history. Okay. And this is because we were still pretty unsure of what was happening. You can see we still never peaked in June, July, August. But from where we did peak to, you can again see the decline then in December as we would normally. January, so we had a little bit slower start, even though numbers are traditionally or technically up. You can see our curve here is a little bit slower. So we went into summer. We still haven't peaked out at a normal market. We're in, here we are, June and July, things had started to slow down. And so the number of listings, we've never actually bridged this gap right here in either one of the last 2 years, which is where we are currently sitting at about 1,400 houses on the market, which a normal market for Toledo area is about 4,000 or 5,000 houses. So it's important for us to keep in mind that it is still a very competitive market year over year. If we, again, look at the previous trends, not just 2020. So it is still a competitive market. Buyers are coming back into the market though, because interest rates, we saw somebody with a 2.78 on a $400,000 house last week. So interest rates are historically low. It's more affordable now to purchase a house, even with the higher prices, than it was when your parents bought houses or when your grandparents bought houses. So the affordability is way up in our housing market, which just basically means that it's more affordable to buy a house today than it has been in the past. So if you're a buyer, don't bail out of this market. It is a great time to be a buyer. If you're thinking about selling, it is a great time to be a seller. Prices are still, we've had a 10% increase last year in price appreciation, 13.8 price appreciation this year. So definitely a good time to be a seller. It's very unusual for us to have a selling and a buying market at the same time, but we definitely have that right now. So if you have any questions, please feel free to reach out. I hope you find this information helpful, and I'm looking forward to seeing you next week. Have a wonderful week. See you next week for Market Monday.